Good morning from the floor CME. This is Chris Robinson with your comment here today. What we're looking at in the grains. I'm going to focus on the grains here today. Number one, we had a lot of selling pressure start last night. Planting progress is going almost perfectly. The next 10 to 14 day looks really good. So all the people that have been long looking for an extended rally, they've been taking some losses here starting last night. We're at key levels. The interesting thing is this. You had last Friday, you had July beans at an 11-month high. November beans also had come up to within a stone's throw of its 11-month high. That, if we don't get followed through there, you may see the funds start to liquidate a little bit more. Friday's commitment of traders showed the funds managed long roughly about 130,000 beans. So that's a level that you're going to have to watch. If the funds start to move on that, that could put some more sell pressure here. But right now, you really have two different markets. And I've talked before about July Nove. July Nove spread trading at 254 right now. The extremes are around 277 to 220. So we're sitting right in the middle of that range. Later on today, we're going to get planting progress. The trade is looking for about 85 to 90% finished in corn and about 50% finished in beans. That's going to be key. The weather's good. If we get this crop in the ground and we don't get any weather issues, it's projecting out to a bumper crop. That's going to mean that a lot of these traders that are long looking for sharply higher prices are going to be long with nowhere to go. So this morning we've got I'd call it a sea of red in the grains. Really the thing we're focusing on the biggest though, from a trading standpoint, is the November, July, the old crop, new crop spread. When you switch back now, let's talk about wheat. Kansas City wheat was the big story. We had a $2.55 rally off of its January lows. That was a great rally. But since all the bullish information has been out there, I've talked to you before, a bullish market needs to be fed on a daily basis. You've got things calming down in the Ukraine. You have our wheat, which is still extremely expensive compared worldwide. You've got the Russians bringing grain from the Black Sea to Mexico, and it's cheaper than our grain. So you've seen that reflected in the prices. This morning, Kansas City went down to 737, which is a big support. Below that, there's 727. 727 is important because if you take the big $2.55 rally, 727 is halfway back. So you're going to have bulls and bears taking a look at that level. It's going to be very key. We could get some good action off that the rest of the week. Ditto for corn. New crop corn. We had an 82-cent rally starting back in January off the lows. We came up. We went through the halfway point there, which was at 76. Traders are looking at the next support around 66 in December corn. If that does not hold, you could get some more liquidation. This is at the time of the year where it comes down to Mother Nature. If the weather looks good and there are no issues with the crops, it's going to naturally put pressure on these prices. So that's about it. From the floor of the CME, this is Chris Robinson. Have a good day.